Well, good evening, everyone. Welcome back to the channel. So I want to do something a little bit different this evening. I want to actually go over what it would take to retire in specific YieldMax funds, saying with $100,000. And before we get started, a special thank you here to Ron Winters, gifted one membership. So I appreciate that, whatever that means. Okay, so what we're going to do is we're going to we'll look at a few of them as a case study. We'll look at CONY and VDY, YMAX. We could even look at Tesla in the scenario that Tesla actually recovers. So first, let's look at CONY. Let's just do some chart analysis really quick over here in Seeking Alpha. Let's do this one over here. Crazy day for the markets today. We had an issue with Berkshire Hathaway A shares. Um, they There was a big glitch. Can look at that really quick. I don't think they actually fixed it, or maybe they did. It's insane how much they've gone up. $631,000. That's like one share of this is like owning a nice house, or maybe a middle of the road house. All right, let's look at Coney first. So Coney is up to 23.27 since inception date, August 15th. We have gone up almost $4. At the peak, we were at $30.08. We've paid out a lot in dividends. So let's do this for starters. We're going to go over here to spreadsheet, and let's actually create a new tab, and we'll call it retire on YieldMax. Now, keep in mind my disclaimer, these are just textbook examples. These are not guaranteed in any way to pan out. We know these funds are risky and they focus on yield. So let me rename it here. Okay. All right, so we're going to have this tab over here. Oh, welcome. Welcome. My new C is down 52% today. Hope it was a glitch. Yeah, it was kind of a crazy day. Bernard Clements says thanks. Okay, so let's go to the spreadsheet over here. Okay, so we're going to start with Coney, and we'll even compare it to the other underlying too. So say $100,000, and this is a lot to put in one fund, obviously depending on your overall net worth. But say 100,000 in Coney. Let's just focus on Coney for now. If we bought it today, it was 23.27, I believe. So it would get us this many shares. Let me change this to just a standard format over here. There we go. Okay, so at a current share price of 23.27, this is how many shares we would get. And if we look at historical dividends, let me go back to Seeking Alpha really quick. They've got some interesting metrics over here. They've got comparison to median. Oh, there's my phone. I thought I left it somewhere else. Okay, let's do this. Okay, so dividend yield trailing 12 months, almost 67%. Median 2.57%. Percent difference to median 2,500.39%. Dividend growth rate 1 year, 3 year CAGR. Dividend yield 67%. Annual payout 15.25 or $15.25. Okay, so here's what we will do. We will take the annualized, or we can do this. It was $2.28. Let's take this. So the annualization of the last dividend, $2.28, is actually $27.36, which is higher than what our current share price is. So let's go over here. All right, so let's do this times 228. This would be your monthly income. You'd make 10,000 a month in this one, if all else stays equal, if this sustains. All right. So if we take this, annualize it, this times 12, 117,576. So there you go. Your $100,000 is somehow going to pay more than what you originally put in, right? Sounds kind of too good to be true, right? Well, if we just take the, what did we say, $15 trailing 12-month yield, which is going to be a misleading figure because we haven't been trading for 12 months. But 1525 is what we've actually realized. So if we take this one, let's go back over here. Let's see here. Where did you go? Oh, here we go. Okay, so let's go back to the spreadsheet. So 1525 is our trailing 12-month over here. So let's, here we are. Oh, welcome. I see you did a video about our continuing drama with you know who. I'm trying to just stay out of it. Um, I don't I don't want to say too much. I think you kind of see what's happened with other channels and stuff, so I kind of just want to ignore it. It is entertaining, but it gets to be a bit much after a while. Ulti pays much more per year than the share price. Yeah, a lot of them do. That's yield max, right? Okay, let's share over here. Share this one. Okay. So what do we say? $15.25. 15.25 over here. So it's actually paid out 15.25 per share in dividends. So if we multiply this by this, we've already made 65,000 in dividends off of our $100,000 investment. If this continues for 2 more months, if we take this divided by 12, and then for 2 more months, it would be another 10,000. So we would have made 75% of our money back. And really, we can't complain because it's actually gone up given the underlying. Now, if you had taken the same 100,000, let's do this. Let's do a couple of scenarios here. So if we took the same 100,000, well, let's actually do this. In scenario B, let's say we bought CONY at the inception date, which was October of last year. So actually, I'm sorry, August of last year. So 1977, the year that Star Wars came out, right? Okay. Let's do this here. Okay. So if we take the 100,000 divided by 1977, 5,058. Number format over here. So we would have more shares. And of course, the share price today with no dividends reinvested would be 23.27, which that would mean we've made, oh, hold on a second, what did I do? That's not what I wanted to do. Let's do this one again, times 23.27, which is 117,703 over here. So we would have made 117, or we would have made a profit of 17,703, and we would have gotten like 65,000 in dividends by now. So our total return, let me do this again over here. Actually, it would have been more because this is what we would have made 77,000 in dividends. So our total return would be 77,000 plus 17,703. So let's see, 77,137.08. Whoops, 77,137.08 plus 17,703.59. So that would have been 95,612. So we would have almost made all of our money back, and we're not even fully through. If we add the other 10,000 that I had said, if we project out the same for 2 more months, that would be actually 87,137 plus 17,703, which would be 104,840. So we would have more than made all of our money back. Now, if we bought Coinbase at the same time, so in this example, if this continued, you could more than retire on this amount. You know, if you're getting almost 10,000 a month, that's pretty good income. But here's the underlying. So Coinbase, let's go over here again and share this screen. Let's see what we got. We read this one. It's sub-farming, not much substance other than insults thrown your way. It's all good, I understand. Oh, meaning, like, he's sub-farming? I don't know. I'm kinda just leaving it alone. Anyway, let's go over here. Um, let's see now. And I mean, stuff like, drama is entertaining if both people can be good sports about it, but, when one party is not such a good sport, it makes it not fun, so I don't wanna partake. Alright, let's do this over here. Coinbase. Okay, so Coinbase is 231.39. If we look, say last August, August 15th, it was 79.18. Wait until you see this example. So 100,000 in the underlying. I know you all hate this argument, but I'm about to make it anyway. So 100,000 in the underlying. Let's see here. Do you think we can get a video on how to choose strike prices for SPY, QQQ, and IWM for daily call options, keeping the shares? Sure. I need to delve back into the wheel strategy. I've kind of been slacking on it. But Ulti has nav erosion. Well, we're not talking about Ulti. We're just talking about Coinbase for now. I may just keep it to Coinbase and make this a series and then cover the other ones. All right, so let's do this here. So Coinbase, the underlying, this is where we are. Um, let me stop this share and go back to the spreadsheet. So I'm just going to keep this a CONY versus Coinbase example for now. So let me go over here, spreadsheet. Let's go here. All right, so if we had bought August 15th, the same day that CONY went public, if we had bought Coinbase stock, let me do this over here. Let me do this. Okay, so we are at August 15th, 79.18 according to the iPhone. We'll go with the iPhone divided by 79.18. We would have 1,263 shares. If we round up. Now, no dividend, but right now we would be at 231.39 per share. So watch this. This number of shares times 231.39. I think, folks, we have a winner. So total return, right? In terms of total return, if you just bought Coinbase stock, I know some of you hate this argument. I don't know why, because we're just dealing in facts. But yes, you would have all your money back in CONY, but Coinbase stock, you would have 3x'd your $100,000. Let me make this bigger so that you all can see it. So look at this. You would have 3x'd your initial investment in under a year. And there was a point in March, you would actually be higher than a 3x. You would actually be, so we were at 266. Actually, we were at up to 283 at one point, the 52-week high. So it would have been the same number if you were able to time it perfectly and cash out at the peak. It was 283, so that was 357,000. So folks, I think we have a clear winner. And then here's the thing, you say, but okay, yeah, I got this gain, but what do I do? Sell it? Yeah, you could sell a fraction of it and take the income that you need, but Coinbase stock might fluctuate. Well, guess what? If it fluctuates, so will the underlying, right? So, and what is it, the 4% rule? If this was your whole retirement and you were going to take 4% a year, well, that wouldn't be enough to live on, but say, I mean, 4% a month would be 11,689. So you take what you need, say you need like 50,000 a year. You could take, say you took like just 15%. You could probably live on that. It wouldn't be this up here, but keep your investment going. Or sell half of it, invest in CONY, get income there. That's a good idea as well. But anyway, that's the gist of what I wanted to touch on for this video. Hope you all enjoyed that. Like, comment, and subscribe if you haven't already. And let's do a few more comments here. Hate hypotheticals. Well, this is not a hypothetical. This is reality. This is what both of these did over the past year. So I'm not sure what the hypothetical is. except no income to pay expenses. Well, you would just have to sell some of it. I know a lot of you hate this argument, but I'm just dealing in facts. This is what these have done. Anyway, I'm going to keep this series going. I'm going to do the others. So again, thank you all for tuning in. I actually like the second idea a lot myself because it actually did a lot better in terms of total return. It's really not. It's $100,000 invested August 15th of last year would have gotten you that many shares and would have produced that amount of total return. So it's really not made up. Just got here. Please start over. No, you'll just have to watch the video again as many times as you want. All right. Thank you all for tuning in. Like, comment, and subscribe. Now that Hog Farmer joined, we can end the video. And we will see you all probably tomorrow. Thanks. Take care. Good night. Bye.